Game over, fellow investors. Oh, sorry, GameStop, fellow investors. Today we're going to be reviewing GameStop, a viable investment business. Anyway, if you're a speculator, well, this could be also for you. GameStop has been in the news, recently in the news, and I just got interested in what's going on there. And Carl Icahn is apparently shorting the stock, so, well, I just got interested in what's going on there. So let's review the financial statements. For now, we just have financial statements for 6 months of operation in 2022. The next quarterly financial statements are going to be available sometime in December. So let's look at the balance sheet on July 30th, 2022. On the balance sheet, what do we see? Current assets, $2 billion. Excellent, looks okay. Well, long-term assets, another almost $800 million. What do we see here? Operating lease rights of use assets. Okay. Okay, let's call it an asset. Let's move forward. Hopefully you can solve this asset. Anyway, it's an asset. Accepted. Then liabilities. We have almost $900 million of short-term debt, which is fine because we have more than plenty of short-term assets. Well, we have $900 million of cash, so taken care of. We can forget about it. Very healthy ratio. Long-term assets, so around $500 million, versus long-term liabilities, $500 million, okay, versus kind of operating lease rights, okay, okay, yeah, I'll take this. Okay, accepted, kind of. Then equity. We have $4 and $4.50 of equity per share. In cash, we obviously have less because, well, these assets, I don't know who is going to buy operating lease rights, right use of assets. How often do you buy these things? So this is acceptable, and half of this is spendable, and well, is going to be expense. So, well, in reality, in my opinion, you have $1 billion of real assets minus these liabilities. So maybe $500 million of real assets, but that you can really use in case of company going under. But anyway, let us consider the equity being 1.3 billion, shareholders' equity being $1.3 billion. In my opinion, it's just $500 million at most. But, well, let's forget about it. Let's go with the generally accepted accounting principles, because we are accountants. So, equity per share $4.42. Well, stock price per share $26. So okay, that's for a growing company, that could be quite acceptable. Let's move forward to the condensed consolidated statement of operations. So we have, I'll go immediately to the 6 months period. Well, in the 3 months period, we lost money, $60 million for the July quarter in 21, and we lost $108 million in July 22. Not very good. For 6 months of operations in 22, we lost $266 million. I'm sorry, that equals to 88 cents a share. So that is like if I have $4.42 in my pocket, and I'm losing 88 cents per every 6 months. This is not a business. Sorry, this is a disaster, and this is base case scenario. So okay, income statement. It's a disaster. We are destroying equity at, which is here, at a rate of $260 million per 6 months. So based on this, we have maybe, well, what, 2 years of going forward at this rate. Let's go to the statement of cash flow. Maybe over there things look better. So on the statement of cash flow, we actually generated for 6 months of 2022, we generated a negative operating cash flow of $407 million. So even worse. So we lost, just from doing running the company, we lost $407 million. So if just the company closed down completely, it would likely lose less money than, so if it operated. So operating this company is a cash losing proposition. Anyway, capital expenditures. Well, we had some positive capital inflows and negative. So let's calculate free cash flow. There are two ways to calculate free cash flow. I didn't go into too many details, but in my opinion, the real free cash flow for 6 months is $438 million. Again, we are looking at, $1.3 billion of equity, and we are losing almost $500 million of cash, real cash. It's not even equity, it's cash, in just 6 months. So in reality, if there are no cash flows in the company is probably going to be bankrupt in 1.5 years. Well, if you look very generously at things, the company is losing just $361 million in 6 months, which gives it probably extra 6 months of existence. So maybe it'll survive for 2 years. So what do we have? We have $2 billion of short-term assets, $900 billion of short-term debt, and we generate $360 million of losses. So we have $1.1 billion of actual cashable assets potentially, and we're generating at best $361 million in cash losses. So again, whichever way you look at it, there are going to be problems in 1.5 years unless something, some drastic changes happen sometime really soon. What are the solutions for the company? First, currently the share price is $26 a share. I would sell as many shares as humanly possible. I would dilute the value of the current shareholders at all costs. I don't care about the current shareholders. I need to survive. I cannot generate cash from operations. I'm losing $500 million per 6 months. I need to generate cash from the sale of my shares. Well, that's my most viable survival option. My second most viable survival option, I need to do something to my business structure very rapidly in a rapidly deteriorating macro environment to start generating positive operating cash flow. Without it, the company is just not going to survive. The other way to look at it is, again, we calculated on the balance sheet the total equity per share is $4.42. Cash-wise, we're losing $1.19 per 6 months. So again, I have $4. It doesn't matter what is the price of the share is. I have $4.42 for each stock, and I'm losing $1.20 just in 6 months of this equity. So my equity is going down. So it's again 4 6 months periods as a best case scenario, unless the company turns around or sells, the stock price stays at $26 a share, and the company manages to sell huge amounts of shares and dilutes the current shareholders, value of current shareholders, and obtains just paid-in capital from the sale of obtains more equity to the paid-in capital through the sale of the shares. There is no other ways to survive for this company. So that's why Carl Icahn is invested in this company. There is a large there are a lot of individuals that short this GameStop. So well, there could be another short squeeze, but if it happens, on that short squeeze, I would probably short GameStop again. It's not a viable business. It's not even a business. So, well, if you like this review, please subscribe. I'm posting some videos about companies that are actually generating positive cash flow and are actually are sanely valued, and I'm looking for those companies. So, good luck, and please subscribe. Goodbye.